All right, let's just jump right in. Bitcoin has been on an absolutely wild ride. And the big question on everyone's mind is, what's next? Today, we're going to break down the data to figure out if this is the moment to buy, or if we're all walking into a massive bull trap. So let's start with the headline number, a massive 49% drop. I mean, a drop like that from the all-time high, it's going to shake up everyone, even the pros. It's just brutal, and you can feel the fear in the air right now. And that really gets to the heart of it, doesn't it? Is this it? Is this the bottom, that point of maximum pain everyone talks about right before things turn around? Or is this just a little breather before we fall off another cliff? Well, what's wild is that the data seems to be telling a pretty surprising story. So let's just get our bearings for a second. It feels like a lifetime ago, but back in October 2025, Bitcoin was flying high at an incredible $126,000. But since then, well, you know the story. We've got global turmoil, economic jitters, and the price has been basically cut in half, down to that mid-$60,000 range. But this is where things get really interesting. If you can tune out all the noise, all the panic, and just look at the raw data, you'll see something pretty remarkable. The research we're digging into today has pinpointed 3 totally separate, rare signals, and they are all flashing at the exact same time. And here's the kicker. Historically, when these things light up together, it's meant one thing: a market bottom. So that's what we're going to do right now. We're going to unpack these 3 clues. We're talking about a key historical cycle, what the on-chain data, the blockchain's own footprints is telling us, and how Bitcoin just came through a major real-world stress test. Okay, so here's the game plan. First up, we've got the gold ratio cycle, then we'll look at the on-chain footprints, and finally, that geopolitical test. All right, first things first. What is the BTC to gold ratio? It's actually super simple. It's just the number of gold ounces you can get for 1 Bitcoin. So if the ratio is going up, Bitcoin's doing better than gold. If it's going down, gold's having a moment. And what's cool about this is it lets us see Bitcoin's pure strength, without all the dollar drama muddying the waters. Okay, now this is where it gets kind of spooky. Look at this pattern. Go back through the last few major cycles. Every single time, the journey from the peak of this ratio down to the very bottom has taken, wait for it, about 13 to 14 months. It's incredibly consistent. So where are we right now? Well, the current downturn started in December 2024, and we are, you guessed it, 14 months in. I mean, the timing it's just textbook perfect. And check this out. This shows you just how much Bitcoin has grown up. When the news of the Iran attack broke, yeah, the price tanked. But look how fast it bounced back, in about a day. Now compare that to past geopolitical shocks. Back with the Ukraine invasion, it took 3 to 4 days to recover. With the Iran tensions in 2020, 2 to 3 days. This lightning-fast recovery we just saw, that screams resilience. It tells you the market is so much bigger, so much more liquid, and it's learning to digest bad news at warp speed. Okay, but hold on. Here comes the twist. And honestly, this might be the single most important detail in this entire explainer. The quote here says it all. The bottom may be nearing if measured against gold. This one little phrase changes everything. Getting this distinction right is what separates the smart money from, well, everyone else. So yeah, this is absolutely crucial because we're not just talking about one bottom. We're talking about 2 potentially different bottoms, the bottom against gold and the bottom against the good old US dollar. And here's the thing, they are not the same and they might not happen at the same time. So let's break this down because this is the key. Bitcoin's price compared to gold actually peaked way back in January of 2025. You add that 14-month cycle we talked about, and it suggests the bottom against gold might have already happened, like last month. But, and this is a huge but, Bitcoin's all-time high against the dollar happened much later, in October 2025. So if you run that same 14-month clock from that date, it points to a final dollar bottom that's still to come, maybe late this year, sometime between October and December. And you know what? History kind of backs this up. Look at past bear markets. We're talking epic drawdowns. 86%, 84%, 77%. So far this time around, we're only down 49%. Now look, the market's different now, it's more mature for sure, but still, a less than 50% drop is pretty shallow compared to what we've seen before. It suggests there could be more downside in dollar terms. Okay, so this brings us to our next big clue. What's happening on the blockchain itself? And honestly, the on-chain data is telling a story of 2 completely different worlds. It's like a tale of 2 investors. On one side, you have retail investors, and they're panicking. And on the other, you have the smart money, the whales, and they are doing the exact opposite. Let's start with the panic. Just get a load of this number. On February 5th, investors collectively sold their Bitcoin for a loss of $3.2 billion in a single day. That is the biggest single-day loss ever. It's the dictionary definition of capitulation. It's people just throwing in the towel and saying, get me out, I don't care what the price is.
But at the exact same time that was happening, what were the big players, the whales, doing? They were on a shopping spree. Wallets with over 1,000 Bitcoin scooped up more than 200,000 BTC in just a few weeks. We're talking huge players here, even sovereign wealth funds. They are, quite literally, buying the fear that everyone else is selling.
So this dashboard kind of puts it all together for us. It's like a health check for the market. Let's run through it. Are short-term holders panicking and selling at a loss? Yep, check. Is the supply of Bitcoin on exchanges drying up, hitting lows we haven't seen since 2018? Big check, that's a potential supply squeeze. Are the whales buying? Oh yeah, check. And look at the other two, MVRV and the hash ribbon. They're not quite there yet, but they are right on the edge of their classic buy zones. I mean, you've got multiple signals here, all but screaming that we're in that bottoming phase. So what on earth are you supposed to do with all this, right? The bottom could be in versus gold, but maybe not versus the dollar. Retail is freaking out, but the big money is buying. The research is super clear on this point. This is not the time to just ape in and go all in. Nope. This is a time to be smart, to be strategic. And the proposed game plan is a classic, disciplined dollar cost averaging approach. Here's how it breaks down. Step 1, you could start nibbling now, but with a small slice of your capital, maybe 20–25%. Step 2, set up some tripwires. You tell yourself, okay, if a big signal like MVRV officially drops into that bottom zone, then I'll increase my buying. And step 3, and this is maybe the most important part, keep some powder dry. Hold on to some cash just in case we do get that final deeper drop in dollar terms later this year.
So at the end of the day, it really boils down to this. The data is painting a picture of two completely opposite trades happening right now. You've got the retail investor, driven by headlines and fear, selling at a massive loss. And on the other side of that trade is the institutional whale, who's been waiting for this fear, buying it up in record amounts and seeing it as a golden opportunity.
So yeah, the data couldn't be clearer. You have one group acting on emotion and another group acting on data and historical patterns. It's one of the sharpest divides we've ever seen between the smart money and the crowd. So the data is showing us that the smart money is buying the public's fear. The only real question is, who will you follow?